So let's take a look at multi-time frame market structure in action. We're just going to build upon all of the swing, well, mainly the swing structure, right, that we've drawn on our 4-hour charts, and we're going to build that across the multiple time frames. So the 4 time frames that we're going to concentrate on in this exercise is the weekly on the top left, and then the daily here that we have on the bottom left, and then the 4-hour on the top right, and then the 15-minute, the M15 in the bottom right hand corner. Now, obviously, having split screen like this is very useful for multi-time frame analysis when you can see multiple time frames together. Now, when you're in a live market, you do not need to have your chart split this way. Some of you may find it useful to have it that way. Some of you may just prefer to have one big screen and then cycle through between. But if you do want to have the split screen, then essentially this is where you can choose to do that. However, I do believe that you will need a paid tier subscription with TradingView in order to be able to have more than one chart, I believe, especially if you kind of want the 5, 6 or 8. I do think you need then potentially even the premium. But anyway, let's start to dive through this. So as always, we're always going to take a top down approach, right? We're going to start from the top and then we'll slowly work our way down through the time frames to increase that timing and accuracy. So hopping on the weekly chart. Now, one thing I will always recommend that you do is, no matter what time frame you're on, right, is never just jump straight into the sort of the most recent price action, sort of when you're trying to define a trend, because what you really need to do is build that story and build that narrative. Now, when you read a book and you read a story, what do? You read from left to right, right? You start at chapter 1 or near the beginning. You don't just jump in right at the end at chapter 98 or whatever. Okay, it's kind of the best analogy I can come up with of how, especially when you're defining market structure, you really need to make sure that you do have your highs and lows defined properly, because sometimes, you could be really zoomed in thinking, that this was, potentially a higher high and a higher low and whatnot, but actually really it's just substructure that you're playing within another range. So if we take a quick zoom out, Forex.com data feed doesn't go back too far, about 2006, but we can clearly see, right, that this was that big bearish move there where we had a swing high and a swing low down here. Now, if I draw this line across, we can pretty much see, just snap that on, that we got a closure below that low there. So what that means is that that formed a lower low, right, with type 1 mapping where we get a candle closure below the low. So where is the highest point before that low broke? Well, it would be this point up here. So we can get rid of that for the second. So then what we can see is price obviously broke up above that high, and then forming a clear higher high. So the weekly chart then switched bullish. We had a pullback, break of the higher high, so another higher high, but then price came down and took out that low. So then we were bearish for quite some time before then eventually price then took this high here, right? That was the low, that was the high. Price took the high, price temporarily switched bullish to form this higher high, but then it came down and it closed below the low, so it quickly switched bearish again, right? Quite a bit of volatility that we can see here. So at this point, once this low was taken, this is the swing high of the range that we're playing within, right? This is the swing low, but then eventually price did move up. We had those sort of minor breaks of structure, and then we got that candle closure there to then switch bullish again. And then this time it actually followed through with that momentum. It had a weekly pullback, and then it took out this high here, right? So now we are playing within this high here and this low here. So that's how you can kind of quickly, it doesn't take a lot of time, but you can still go quite far back and just make sure you definitely do have your highs and lows marked out correctly here. So what I tend to usually do, especially with the weekly time frame, is just mark out the range of the high and the low that we are playing within. So have some pre-saved templates here, and we can draw on, I can get it selected, there we go, draw on our weekly high up here and put that in. So now we know pretty much the range that we're playing within the weekly chart. We are clearly bullish, we're playing within this bullish range. So obviously, after we had, let me draw on the weekly breaker structure over here. So I'm just going to quickly put that on because I don't have a pre-saved template for the weekly chart, and then just put that in the middle. Okay, so we had our weekly breaker structure. We've obviously then, initiated that weekly pullback, and we're playing within this weekly bullish range. So at any point in time, we have to run with the blind assumption that this should be a strong weekly low, and this low should hold. And at the moment, this is a weak weekly high. Why is it a weak weekly high? Because it hasn't taken out the low, right? So at any point in time, we can expect a weekly high low to kick in and potentially run that weekly high. Of course, it doesn't have to happen. We're always playing with probabilities, and this weekly low could go, and then we could switch bearish, okay? But for now, purely just using the concepts that we've looked at so far with market structure. This is the tools that we're using. We can run with the assumption that this weekly bullish range is going to stay intact, and we have to be aware that a weekly high low could kick in at any point, and the weekly could try to make a move for this weekly high to try and form that daily high, right? So that's the weekly chart playing in a very clean, sort of simple bullish range here. So let's dive down a little bit into the daily chart down here. I'm just going to tie this up a little bit just for my chart OCD there. So what do we expect after that weekly break of structure, that weekly high? We expect a weekly pullback, right? How can we know when that weekly pullback is about to kick in, right? When this run is over and the pullback is about to kick in, we can look for that change of character, and how will that look on the daily chart? I'll just show you at the same time, right? If we look for a weekly change of character, let's zoom in and have a good look at this. So price, all of these candles break the prior candle's high, right? This candle fails to do so, so there's a minor pullback there. Then we move up again, then we have a minor pullback here, right? And then we move up, and then we come down and we take out that minor weekly low. So what is that minor weekly low most likely going to be on the daily chart? It's most likely going to be a swing low, and then that weekly minor low, right? That change of character on the weekly chart actually is a trend change on the daily chart, because if we look into the daily chart and zoom in on this price action, what do we have? Well, we have price trending to the upside. Clear swings in price action, right? High, low, higher, high, pull back to form the higher low. We break that high to form a higher high, right? And then this would be our swing low down here. So then price comes down, and then we get that candle closure below there on the 18th of January 2021. And then that gives us a bearish daily trend change, right? Which then gives us decent confirmation that the weekly chart is now likely to have that weekly pullback, right? How far can we expect potentially that weekly to pull back? Well, we can draw on the premium and discount of the weekly range, right? And then we can expect price to potentially pull down into discount prices. But let's just draw on our daily breaks of structure here, right? So for me, this would be a daily swing high. So just going to map that out, right? And then this is where, right, price moves up. Now it gets that break of structure, and then the daily does switch bearish, but it's pretty much only for one candle for one day, and it retraces and continues that up move. So for me personally, I view that just as one swing leg, right? And this is just a minor low. So for me, the daily chart is not confirmed bearish until we get a break of that low, which we don't get until the what was that, the 15th of January, yeah. So then the daily switches bearish. But just from a daily chart perspective, right, how could we know, or what do we expect, I should say, after a daily break of structure to the upside? We expect a daily pullback. How do we know when the swing run is likely to end and the daily pullback's kicking in? We get that change of character there, right? So that at that point gives us an indication that obviously the pullback's kicking in. We've obviously pulled back quite a fair bit at that point. But if you're expecting, right, a weekly pullback, then we can potentially anticipate that this is not just going to be a daily pullback, but actually we may get a full-on daily bearish trend change, because the daily is likely going to need to switch trend. The daily is likely going to need to switch bearish in order to facilitate a full weekly pullback, right? Which is what happened. So you can see that weekly pullback, right, first on the daily trend change, right? But then how could we have anticipated that even earlier, right? Well, what is that daily change of character, that daily minor break of structure? What do you think that will look like on the 4-hour chart? Well, if we go and scroll across, right, and what I'm going to do is mark out that daily change of character here. So I'm going to draw that across, and I'm just going to change it to a dotted line just so we can see the difference. But what is that 4-hour minor break of structure? That daily minor break of structure, that daily change of character. On the 4-hour, it's a 4-hour trend change, right? Because this was our swing high, right? We got the pullback, and then we got that break of the high. So this, taking out the 4-hour swing high here, just line this up, right? So then the lowest point before that high broke there is this point down here. So then that becomes our 4-hour swing low. So then when price comes down and closes below that 4-hour low to make the 4-hour bearish, we then get that daily change of character, right? So we can anticipate literally the weekly pulling back all the way from the 4-hour chart. Now, of course, the 4-hour chart could give you a few false signals before that potentially happens, but it's just showing you that you can anticipate that happening. But obviously, the higher the time frame that you wait for to get that confirmation is the more higher probability that you are going to have anticipated that the weekly pullback is actually starting. So it's not until we get that daily that daily bearish trend change down here, right, on the 15th of January, that actually we then get that weekly change of character there, right? But the 4 hour had already switched bearish all the way up here, and we already had a 4 hour change of character up here, right? So you can anticipate it earlier and earlier, but you just have less confirmation, because there would have been quite a few 4 hour changes of characters, all the way up, like, let's have a look, potentially over here, right? But it was a full signal in terms of trying to signal that the weekly pullback was going to kick in, right? Because the weekly stayed bullish for another few days. But anyway, let's take a look and just concentrate on the daily chart for now, whilst we are seeing how far the weekly chart is going to pull back. So we get that break of the low, and then we have this pullback here, and then we break the low again. So then we get another daily bearish trend change here. Sorry, not bearish trend change, we get another daily break of structure. So now what we are playing within, we are playing within the highest point before that low broke. So we are playing within this range here, and obviously when price pulls back, that would be our low there. Now, what does price try to do? Price does try to break up through that high, right? You can see intraday, price would have been trading all the way up at this level here. But this is where it's really key, no matter what time frame you are on, to wait for the candle to close, right? If you are using type 1 mapping and you are using body candle closures to denote your true breaks of structure, right, to denote your swing higher highs and higher lows, then you need to wait for the candle closure. So at this point intraday, right, you could see a lot of momentum coming up, and you could think, right, the daily switching bullish again, and you can get really attached to that bias, right? But actually you have to wait for that daily to close, and we can see that it failed to close above that high. It essentially was just a liquidity grab, and we are still remaining bearish at this point, right? Because we have not closed above that high to form a higher high. So generally when this happens, right, if it's a move to the upside and then we close back down, generally that's a very bearish signal. But how can we wait for a little bit more confirmation to tell us that this will be the daily lower high, right? Because obviously we can see that price did go on and continue the bearish trend, and we did get another bearish break of structure. But at this point here, we're not going to potentially know that. So what can we do to give us a bit more confirmation and increase the probability that this lower high has formed? Well, we can wait for a daily change of character, right? So as we can see with that pullback, we had the movement up, we pull back, then we broke that minor high there, right? Now this is where it's a bit more subtle, but you can see this candle here on the 24th of February, it failed to break this candle's high here, the previous candle. So what that means is it was an intraday pullback, right? It was that minor pullback. Then we took that high, we failed to close above the swing high, right? We closed back down, and then what happened? Price came down and it took this minor low. So we got a daily minor break of structure pretty much, right? We've got that change of character. Now, what do you think, if I mark this out, that daily change of character there is going to be on the 4 hour chart? You've guessed it, hopefully. That 4 hour, if I move across, right, we've already marked this price action out in the prior lessons, right? That 4 hour, or I should say that daily change of character with that dotted line was the 4 hour trend change, right? And you can see we get that confirmed 4 hour trend change there. I'm just going to delete the daily dotted line now. And that's how you can see how they sync up. But you could have anticipated that even earlier, right, when we saw the 4 hour change of character there, right? So it's just showing you that relationship between the different timeframes here and of how you can anticipate those moves starting to kick in. So let's continue this daily bearish trend and draw on our structure. All right, as the daily clearly continues to be bearish, and then price pulls back. So let's mark on our next daily swing low here, just trying to speed things up a little bit, and we can see that that bearish trend continues, right? So we were playing within quite a large daily range there at that point, right? Because that then would have been our high and this would have been our low. It was a bit of a short pullback. Let's have a look on the 4 hour chart and see how that looked and sync these all up a little bit better. So this is obviously the daily range we're playing within, right? Within those two big orange lines. The 4 hour chart starts to pull back, so that's when we marked out, remember, that 4 hour change of character. And what does that do? That signifies that that daily pullback is starting to kick in, but then we've got a 4 hour change of character to the downside, potentially signaling that that daily pullback is over, just a shadow pullback, and now we can start to target that weak daily low, which was also a weak 4 hour low. And as we can see, price then eventually broke down and went through there. So then we were playing within this daily range here, right? That being the highest point before the daily low broke. And then when price is coming down, right, how can we anticipate when this swing run is over, when the daily swing run is over and the daily pullback is about to commence? Well, we can look for a daily change of character, right? So after that daily break of structure to the downside, we are expecting a daily pullback, right? So then we see that minor high because that previous candle failed to break the previous candle's low, so it's a small pullback, and then price takes that high, which is our daily change of character. So if we mark out the daily change of character, right from there to there, just think up a little bit, what will that daily change of character most likely